Welcome to the Micro and Small Business Mastery, the podcast, where we help you navigate the ins and outs of running your micro and small businesses, providing actionable insights and strategies to thrive. I am Dr. Karen Lowe, founder of Epigram Consulting Services. Please like, subscribe, and share to help us get the word out about building great micro and small businesses. Today, we're diving into another topic that every small business owner needs to master because it is very instrumental to the company's bottom line. It is implementing tools and processes to control and reduce the business expenses. I will walk you through everything in simple terms so that by the end of this episode, you will have a clear understanding of what steps to take to keep your business expenses in check. This is an interesting topic because business owners will associate the tools needed here with additional expenses and time they would prefer to put elsewhere, ignoring how important it is to the company's bottom line to allow them to work more effectively and efficiently on those other tasks.
Let's go.
First, let us define what we mean by controlling and reducing business expenses. In simple terms, controlling expenses means keeping a close eye on where your money is going and making sure it is being spent wisely. Reducing expenses is about finding ways to cut costs without sacrificing the quality of your products or services. For small business owners, managing expenses effectively is crucial because it directly impacts your bottom line, meaning your profit. And even more so for those starting out and those operating on a shoestring budget. The less money you waste on unnecessary costs, the more profit you keep in your pocket. We will look at how you achieve this through effective tools and processes. Now that we understand the importance of controlling expenses, let us talk about the tools and processes you can use to do this. Implementing the right tools and processes helps create a structured approach to managing your finances and ensures nothing slips through the cracks. In this section of the episode, we will talk about accounting software, expense tracking apps, and inventory management tools. First one, accounting software. One of the first tools you should consider is an accounting software like QuickBooks, Zoho Books, Xero, or FreshBooks. There are many more. I would research to see what the best option for you is. These tools help you keep track of every dollar that comes in and goes out. They provide you with a clear picture of your finances and make it easier to identify areas where you can cut costs. For example, if you notice you're spending too much on office supplies, you can look for cheaper alternatives or negotiate better deals with your suppliers. Side note here, there are always free or affordable options you can buy until you can afford the pricier ones. Using accounting software ensures that all your financial transactions are recorded accurately, both incoming and outgoing. This helps you avoid overspending and makes it easier to spot unnecessary expenses. It also helps you with tax time. By regularly reviewing your expenses, you can make informed decisions that positively impact your business's profitability, not to mention mental health, because where money is concerned, it could negatively affect our mental health. Expense tracking apps. There are many apps available. Apps like Zoho Expense, Expensify, or even a simple Excel spreadsheet can help you track daily expenses. Most accounting software is good here, but micro and small businesses often operate on the go. Hence this suggestion. These tools can be used by you and your team to record every purchase, no matter how small, as it is done. This process helps in understanding where money is being spent and identifying trends or patterns that may indicate wasteful spending. A very common trend with startups for micro and small business owners is spending on wants and sacrificing needs. So track expenses based on dates, months, and weeks to be able to compare financial periods. Expense tracking apps create a habit of accountability for you and your team. When everyone is mindful of their spending, especially you, it is easier to stick to a budget and reduce unnecessary cost, which directly increases profitability. Number 3, final, inventory management tools. If your business deals with physical products, using inventory management tools can help you manage your stock levels efficiently. Again, research to see best fit for your business. These tools prevent overstocking, which can tie up your cash in unsold goods, and understocking, which can lead to missed sales opportunities. By optimizing inventory levels, you can avoid excess stocks that does not sell, which reduces wasted expenses and improves cash flow, positively impacting profitability. Let us talk about processes to reduce and control expenses. Number 1, regular financial reviews. Schedule regular financial reviews at least monthly to go over all your expenses. Look at your bank statements, credit card statements, and receipts to see where your money is going. Compare this against your budget to see if you're staying on track. Set a specific day each month to review your finances. Create a checklist of all the documents you need to review. Look for any discrepancies or unexpected charges and categorize your expenses to see where the bulk of your money is going. Regular financial reviews keep you informed about your financial health, enabling you to catch and address problems early. This proactive approach can prevent financial leaks that eat into your profits. Number 2, and one of the hardest things to do, set a budget and stick to it. Create a realistic budget based on your income and expenses. Realistic being the keyword here. Make sure to categorize your expenses into needs and wants. Focus on spending more on the needs and less on the wants. Start by listing all your fixed expenses, such as rent and utilities, and variable expenses, such as marketing and supplies. Allocate a specific amount for each category and monitor your spending to ensure you do not exceed your budget. A well-planned budget helps control overspending and ensure funds are available for essential areas that contribute to growth. Staying within budget means more money remains as profit. Final process for this section: negotiate with suppliers. Do not be afraid to negotiate with your suppliers for better rates or discounts, especially if you have a long-standing relationship with them. And this goes for your phone and internet service providers. They may be willing to give you a better deal to retain your business. Research alternative suppliers and compare prices. Approach your current suppliers with this information and express your desire to continue working with them, but at a better rate. Be prepared to negotiate terms that are beneficial for both parties. Fun fact, I am in the service industry, but there have been times when I go to cancel a subscription, I am asked why. In saying I cannot afford or the price is too high, I am given an option for a discount or free for a limited time. This is not for all subscriptions cancelled, but it exists, so look out for them. Negotiating better deals with suppliers can significantly reduce your cost of goods sold, which increases your gross profit margin and overall profitability. So, why is implementing tools and processes to control and reduce business expenses important? Why sacrifice the time to do it? Controlling and reducing expenses is not just about saving money. It is about creating a more efficient, lean, and competitive business. When you manage your expenses wisely, you have more resources to invest in growth opportunities, whether that is marketing, hiring, or new product development. Implementing effective tools and processes helps you stay organized and proactive, rather than reactive. This preparedness and efficiency can give you a competitive edge, attract more customers, and improve customer satisfaction, not to mention the mental strength and peace of mind you will have, as opposed to always trying to put out fires in the business. Every dollar saved from reducing expenses is a dollar added to your profit. By minimizing wasteful spending, you increase your net income, which can be reinvested into your business or saved for future needs. This financial stability is crucial for long-term success. If you have not already started implementing these tools and processes, now is the time to do so. For those who have already started, double check to make sure you're on the right path. Start by selecting the right accounting software for your business, track your expenses diligently, and set a realistic budget. Remember to review your finances regularly and look for ways to negotiate better deals with suppliers. By taking these steps, you will not only control and reduce your expenses, but also boost your business's profitability. And remember, every small step you take toward financial discipline will significantly impact your overall business success. Thank you for tuning in to the Micro and Small Business Mastery, the podcast. If you found this episode helpful, please like, subscribe, and share. And if you have not already done so, click the notification button for twice weekly content. We post on Mondays and Thursdays each week. If you have questions or want to share your experiences with implementing tools and processes to control and reduce business expenses, please leave a comment below or email us. Your feedback helps us create more valuable content for you and others. Your feedback and insights are always welcome. Also, what topics would you like me to discuss in the future? How can I help you? Epigram Consulting Services offers business coaching, strategy consulting, marketing solutions, and much more. You can always contact us if you need more practical solutions for your business. See our website details in the description below and in our bio. We're also on all social media platforms. Thank you so much for staying with me. Continue creating your business masterpiece.